Well, guys, after a long day of work, guy's thirsty. He's got a drink. So, a little bit of liquid down the hatch. Woo! How we doing today? What is up, everybody? Welcome to Trey's Race, where we freaking talk fast and don't skip class, baby. I'd like to preface by saying that I'm not a financial advisor nor expert, so take what I say with a grain of salt. Let's get into the video. So today, my friends, my family, my fellow Gorilla Gang, I want to talk about AMC here, obviously. I'm going to give you the update on a couple different things. I want to talk about the Ortex data, the short volume percentage, stock tracker, call options in the money, about how many shares are available to borrow. I want to talk about the Feds a little bit because they did speak today, and I think that it actually is going to affect not just AMC, but the entire stock market, and then wrap it up with the technical analysis. So without further ado, holy crap, Jesus Christ, woo, spider, woo. Holy oh, Jesus. Oh, that thing's still alive. Oh my God. Holy, what the, go away. Woo. Die, spider. Oh, holy Toledo. Give me a sec. I gotta come back. Jesus. I wasn't ready for that. I was not ready for that. Jesus Christ, that scared me. Anywho, let's start off here with Ortex. So I want to go over Ortex down and just show you what kind of is rocking here today. Short interest went down just a little bit, right? This gives you about 85% of the exchange reported short interest, so down about 0.76%. This is reported, right? Keyword being reported. Gives you an overall trend. So the trend is, as of right now, current short interest about 13% of free float, 66.49% estimated total millions of shares that are shorted into the market. Keep in mind that when Volkswagen's closed, now obviously this isn't an apple, it's an apple and an orange, right? There's a different free flow, there's different investors, but nonetheless, it's closed off of about a 10% total short interest. So 13% is easily enough to get a nice squeeze effect out of the current stock, right? 87.05 million total shares on loan, 17% free float. That free float on loan, the estimated short interest is squeezing down, which further, essentially validates the hypothesis of a forced recall on any sort of shares that were out on loan, right? Utilization about 81%, which means it's not a terribly hard to borrow stock. Otherwise, that cost to borrow is actually going, about the same. It had reached about 19% of the previous trading day, sitting about 8.23% right now, so not a huge amount of pressure on short positions. However, it will start to go up as the losses continue to accrue for those shorts, right? Another cool thing that Ortex actually put out today was a squeeze signal, baby! Let's go! Short squeeze type 3. Now, this is typically a buy signal, obviously, and the signal return will give you some sort of estimate on how much this will go up in the next 2 days, right? So that's a pretty cool thing to see. Average mean return is about 27.4%. I'm assuming, I don't know off the top of my head, right? This is based on, essentially a 2-day hold. However, that's a pretty cool thing to see, right? The average return being 27.4%. It's just a nice statistic to have in your back pocket for the potential for the stock to have a nice run-up. So do have that in our back pocket here according to just the basic analytics and a variety of different things that they show, in terms of the squeezability of the stock. Daily short sale volume percentage, as I had hypothesized yesterday, as many people could have probably guessed, the short volume percentage spiked. What do you know? Pretty wild stuff. On June 15th, we had a total of 47% total short volume percentage, which is not surprising when you look at the fact that the stock pulled down pretty freaking hard, right? Now, I'm anticipating the exact same thing again tomorrow. You saw a heavy sell-off today, right? Maybe you had some people that got out of the stock, maybe, right? But the majority of people that are holding right now are apes, like taps. They're apes, man, I'm telling you. So I really do think there's some more shorting that took place today, and you're going to get that confirmation tomorrow when you look at that total daily short sale volume percentage, right? So that's a good thing to see. That means that likely, anyways, most of that sort of sell-off did come from some short sellers. Finally, I want to finish this off with Stock Tracker. You can see there's currently 426,000 call options that are expiring in the money on June 18th. As we come closer to Friday, when those call options that are out the money, do expire, you're going to have more of that gamma squeeze effect, which essentially comes from these call options that are out the money that then run in the money and get hedged for. So how many of these are actually hedged for? Probably the vast majority, right? So if you look at the call options chain for AMC right now, I would imagine anything up to maybe 52, 53 bucks is likely hedged for, at least in some sort of fashion, right? And as we get closer to Friday, Thursday and Friday, right, these are going to really do some damage. So as we get over 56, 57, 58, 59, 60 bucks, you can see how critical these two numbers are right here and why they're probably trying to hold it down underneath that $60 level of resistance. If we get over that, man, the gamma will be stupid, filthy, disgusting, absolute nastiness. I mean, that's a lot of call options that can really do some damage in terms of gamma squeezing. So that's kind of what you got cooking up right there. Total shares available to borrow is about 2.3 million, and this is it stayed about the same throughout the entire day. Doesn't mean that shorts didn't take positions, right? This gives you an overall trend. It doesn't show you all of the available shares. It could just simply mean that there are lenders that are giving a constant supply of shares out to the market. And this is probably because if you look at Ortex, the utilization isn't maxed out, right? There are currently available shares to borrow, so it's not that difficult for shorts to establish new positions. Does that threaten the overall squeeze? No. It actually gives you a higher ceiling. The fact that people are still taking short positions on this stock, right, even though it's trading at 50 bucks and even though there's still a squeeze on the table, just shows you the damage that can really be done here, my friends. So that's what you got cooking up right there. Now, I want to finish this off by talking about what the Fed's talked about today regarding inflation. So the Fed's, if you weren't able to catch the live stream, the Chairman Powell, he came out and talked about inflation expectations. He said that he sees a spike in 2023, which I think is a little bit of a liberal estimate. I think it's going to happen a little bit sooner than that. What do I know? I'm 23-year-old fucking nobody in the middle of who knows where, But I spoke about this before, and I think inflation, interest rates, and honestly a tightening of the economy is going to affect AMC stock and the entire stock market for basically two main reasons. So I've shown this before. I'll show it again. I'll give you a brief rundown on repos and reverse repos. Repos are exactly this. Feds give money to banks, and the banks give the Feds treasury bills. It's a transaction, right? So the Feds essentially are the buyers, the banks are the sellers. Banks are selling treasury bills, the Feds hand over money. What this ended up doing, and you can look at this back in actually April of 2020. I thought it was March, I misspoke, I apologize, it was actually April. The supplemental leveraging ratio was put into effect. And this actually allowed big banks and institutions to leverage more capital since the economy was not doing very well. Check this out. Federal Reserve Board announces temporary change to its supplementary leveraging ratio rule to ease strains in the treasury market resulting from the coronavirus and increase banking organizations' ability to provide credit to households and businesses. The banks didn't have a lot of money. People were defaulting on their loans, defaulting on mortgages. Things were tight, right? And when supply is tight, demand goes up. Interest rates go up, inflation goes up, XYZ, 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 right? Well, what ended up happening? You had repo that was sent, a repo transaction. The Feds gave money to banks, banks gave back treasury bills. This actually ended up loosening the economy for the time being. It was a Band-Aid, right? It was a Band-Aid that ended up saving things a little bit. Well, now you've got the exact opposite effect, right? So there was heavy leveraging. They allowed, big banks to work with more capital than they previously were. And now the banks are flush with cash. So you've got reverse repos that are starting to happen. It's the exact opposite of a repo market. They're taking money back, right? So the Feds are giving back their bills, banks are giving back the money. So in this instance, right, what is happening is the Feds are the sellers, the banks are the buyers. The banks are buying back these treasury bills, and this causes inflation. And I'm going to tell you why it's going to cause inflation and how that affects the stock market. It's because the reverse repo market is astronomical. The overnight reverse repurchase agreements peaked out at $583 billion in June 14th, and it's still astronomically high. You've got $520 billion here in June 16th. Feds print out a lot of money, and we needed it, to supplement sort of some of the small businesses and the retail investor and the little guys out there who are really struggling on the street. Unfortunately, the majority of the money that was printed and the majority of the money that was put into the economy was given to the banks. The big boys, right? And what do they do with that money? They leveraged it. That's what the supplemental leveraging ratio is, right? Check this out. Supplemental leveraging ratio generally applies to financial institutions with more than $250 billion in total consolidated assets. It requires them to hold a minimum ratio of 3% measured against their total leverage exposure, with more stringent requirements for largest and most systemic financial institutions. This change would temporarily decrease Tier 1 capital requirements of holding companies by approximately 2% in aggregate. Essentially, gave them more leveraging opportunities, right? More leveraging opportunities means you can play with more money that you didn't have. Margin debt is astronomical right now. Over $800 billion, $200 billion of that coming in the last 6 months. It's disgusting. And now that has ended. The supplemental leveraging ratio ended in March 31st, 2021. Then the Feds are tightening this back up. Inflation, freaking interest rates will go up, mortgage rates will go up. It's going to tighten the economy. I think it's going to be tough. I really do. And how does that affect the stock market? How does that affect AMC to bring this all full circle, right? It is meaning that if you were leveraged money that you don't have, and banks are recalling loans, right? Let's say that the banks are tightening up. So either A, you return the loan, or B, interest rates go up. What ends up happening? Institutions that borrow money from banks got to make a choice. And that choice affects the stock market. I really think this whole systemic problem that AMC is the culmination of is going to result in a crash, a market crash. I don't know when. Obviously, nobody can freaking predict that. But I'm telling you, when AMC does the dirty deed, when this thing goes to freaking Tendy Town, it's running along with freaking King Kong, man. You're going to see the market pull back hard, and you're starting to already see it. I'll tell you what. Check this out. Let's look at the SPY real quick. You look at the SPY. This is not something that you normally see. For a stock to hug just below a resistance level like this for literally months, That's not something you normally see. Look at this. The SPY has been stagnant, trading sideways, consolidating for literally since April 15th. Now that's disgusting. That's not, it just doesn't feel right to me, right? And it doesn't look right either. So AMC, any heavily shorted stock in the market, any stock that's shorted with heavy leverage will squeeze up. It just will. That's what's going to happen when margin calls come and when the feds, essentially want their money back and banks got to do something about the loans that are out, the interest rates that are out, the mortgage rates, and blah, 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 blah. You get the whole spiel, right? It's going to make shorted stocks squeeze up. It's going to make long stocks pull back. That is, I am... Obviously, I can't say anything with absolute certainty, but I feel very convicted that's going to end up happening. And that's some great confirmation coming from the feds on how that can actually affect AMC stock. So it's good to see them talking about that. Honestly, I think they're being a little liberal, but that's all right. Liberal with the way that they say 2023. I think it's going to be a little sooner than that, but that's a whole different cup of tea. Nonetheless, let's finish this off with the technical analysis. So in yesterday's video, I'd actually touched on the fact that I believe we are going to have a small dip. There's two different, potential opportunities. I thought you might see it drop down, and there was two kind of zones that I was watching for. There's a Fibonacci retracement down about $53, and there was a level of support down at about $48, $49. I ended up doing the first one, right? I did the former. It ended up pulling back to that Fibonacci retracement zone at about $53. It actually dropped down about $1.50 lower. Sorry, I was wrong. I was off by a little bit, but pretty dang close, right? It ended up pulling back here a little bit, and it's starting to get a little bit of a bounce. I wouldn't quite call this a bear trap, right? It's not quite a bear trap, but it's a very good setup nonetheless, right? That's a pretty nice setup to have rocking right now on AMC stock. In the after hours, we're up about 0.2%. So what could potentially happen here just looking at the way that the stock, the chart is set up right now? Well, it is still respecting this overall huge, monstrous bull flag setup, right? It is. It broke out of this downtrend. Now it's doing a little consolidating, winding up. It's respecting a upside ascending level of support, getting ready to break that $60 level of resistance. I've said it before. I'll say it again. $60 is critical mass velocity point. It's going to bring you not even to the wrong side, not even to the moon, to Pluto. It's going to be nasty. And you can see why. The gamma squeeze effects from $59 and $60 alone, 22,000 and 31,000 total call options. That's a lot of shares, man. And that could drive it up to 61, 62, 3, 4, 5. Who knows how high it'll bring it up, right? But that can create this feedback loop, the FOMO, the gamma squeezing, which can lead to short squeezing. I'm telling you, my friends, this is still set up. This is beautiful. AMC is sitting just fine. Even though it was down 6.5% today, I don't give a shit, man. I'm chilling. Who cares? AMC was at $8.90 back on freaking May 7th. Think about that. Man. I tweeted this out because I saw Usain Bolt talking about it. I saw this kind of rolling around. I think Review Dork put it out. He was talking about how it took him years of training to be able to run 9 seconds for a 100-meter, right? I was a runner before. I ran between the age of 12 and 22 years old. It took me 10 years to be able to drop my mile from freaking 7:55 was my first ever time mile to 22 years old. I ran 10 miles at an average pace of 5:04 per mile. It took me 10 years to do that. This is a game of patience. You gotta be patient, man. Generational lifetiming wealth and money does not happen overnight. It's not something you're gonna wake up to one day and be like, wow, that just happened, right? It's a freaking battle. Everything worth fighting for, everything great comes with friction. If you're watching every single day play out with stock, it's just as simple as it gets, right? Stocks go up, stocks go down, but ultimately, I'm bullish. And all that matters is that you're right. All that matters is that you're right. Do you think you're right? I think the apes are right. I'll tell you that right now. And that's what I've got for this video. So blah, 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 and a whole spiel. Drop a like, consider subscribing. Whatever you want to do, my friends. Catch you on the next one. Much love, light taps, and peace.